Hey there, future financial wizards. This is Zach Gordon, your go-to personal and business funding consultant. Today, we're going to dive deep into a powerful strategy that could be a game changer for you and your cash flow. I call it the Bank of America check writing play. Over the next few minutes, I'll break down how this method works, its potential benefits, the crucial risks that you need to know, and whether you're a business owner, aspiring entrepreneur, or investor, this information could open up a new possibilities for your funding toolkit. Well, let's go ahead and get started. Let's start with the basics. The Bank of America check writing play is a method that some cardholders use to access cash from their credit cards. In other words, credit to cash. Bank of America offers convenience checks to certain credit card holders. These checks are linked to your credit card account, but not your checking account. You can use these checks like regular checks, writing them out to yourself or others. When you deposit the check, you're essentially getting a cash advance on your credit card. It's important to note that while we're discussing Bank of America specifically, other banks might offer similar services. So you need to always check with your specific financial institution for details with any bank that you have a relationship with. Now, let's go ahead and walk you how this might work in practice. You receive convenience checks from Bank of America, and you go ahead and write yourself for a check for, say, $5,000. You deposit this check into your personal or business checking account. The $5,000 is now in your account as cash, basically credit to cash, as we said before, available for immediate use. On your credit card statement, though, this will appear as a $5,000 cash advance. It's worth noticing that there may be limits on how much you can write these checks for, typically related to your credit limit. Also, not all Bank of America credit card holders will receive these checks. It often depends on your account standing and credit history. So why might someone consider using this strategy? Well, there are several potential benefits. Quick access to cash. This method can provide fast liquidity when you need it most. Flexibility. Unlike a loan with a fixed repayment schedule, you have more control over the repayment within your credit card terms. No additional credit checks since you're using an existing credit line. There's no need for a new credit application. Business opportunity for entrepreneurs like myself. This could be the ability to act quickly on time-sensitive deals or inventory purchase. Investment leverage. Investors might use this to take advantage of short-term investment opportunities. Emergency funds in a pinch. This could serve as a backup for unexpected personal or business expenses. Debt consolidation. In some cases, this could be used to pay off higher interest debts, although this should be approached very cautiously. Remember, these benefits come with significant caveats, which we'll discuss next. Now, here is the critical part, the risk and considerations. This isn't free money. There are serious factors to weigh. Cash advance fees, which can often be substantial, often 3 to 5% of the actual amount on a $5,000 check that's easily $150 to $250 right off the bat. Higher interest rates as cash advances are usually have higher rates than regular purchase. We're talking potentially 20 to 25% APR or even higher. And there's no grace period. Unlike regular purchase, interest starts accruing immediately. There's no interest-free period. And the impact on your credit utilization using a large portion of your credit line can negatively impact your credit score. And the potential for a debt spiral. If you not managed carefully, this could lead to accumulating high interest debt. Opportunity costs, though, using your credit line in this way means it might not be available for other potential uses. And you have to check about bank policies. Some banks may have restrictions and additional fees for these types of transactions. Also, depending on how you use the funds, there could be tax considerations, especially for businesses. As a funding consultant, I always stress to my clients, this strategy is not for everyone. It requires careful consideration, financial discipline, and a clear plan for repayment. So when you might use this strategy that makes sense, it could be appropriate in situations such as bridging a short-term cash flow gap in your business, taking advantage of a limited time business opportunity with a clear return on investment, covering an emergency expense when other options aren't available. However, it is crucial to explore alternatives first, such as business lines of credit, personal loans, invoice factoring for businesses, negotiating with vendors and creditors, exploring investor funding or crowdfunding. Each situation is unique, and which is why personalized advice is so valuable in these situations. There you have it, folks, a comprehensive look at a Bank of America check writing play. Remember, in the world of business and personal finance, knowledge is power, but how you use that knowledge makes all the difference in the world. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell. And hey, if you're looking for personalized advice on funding strategies for your business or any investment plan, drop a comment below or check out our consulting service. Until next time, this is Zach Gordon helping you navigate the world of funding and credit. Stay savvy, stay funded.